What's going on, everybody? Happy Friday. It's that time of the week. It's time for the latest RWA news. Real world assets are taking over, and we've got the latest and greatest for you. My name is Herwig. You can call me Happy. I'm the founder of STM.co, the company behind the Security Token Show. You can go check that out for all the latest and greatest data on tokenized assets. But with that, we've got quite the show, great interviews, guest contributor from MetaWealth, Amr, and a lot of amazing news to go over. So with that, before we get started, please give us a like, a subscribe if you haven't already, and share it. That would be the most useful thing if you like this show and want to give us some support. But with that, it's time for the market movements. All right, everybody, it's time for this week's biggest updates in the RWA market with our special guest contributors. This week, we've got Amr from MetaWealth, one of the leading real estate platforms, as well as Jason Barraza, of course, our COO at STM, the producer behind this, and the correspondent you know and love from the interviews. Amr, how you doing this fine Friday?
I'm doing pretty good, and thanks for hosting me. Looking forward to this episode.
Yeah, it's a big week in news. Jason, how about you, buddy?
Doing great, man. Exciting week of news, as you just mentioned. There's a lot to cover, so ready to jump in.
Yeah, well, I bet you're excited about this one, Jason, because at Tokenize This, you had the pleasure of interviewing the head of Connexus Labs, Alexandra Prager, from JP Morgan, which was pretty cool. We got a lot of insights there. That's available on YouTube, folks. But recently, we just saw this week that Ondo Chain has now done the first outside deal with Connexus here, a cross-chain deal for a DVP transaction. This is using OUSG to tap into, obviously, Connexus's platform, using Chainlink for the interoperability in this case. We know we've seen JP Morgan try to do projects in the past, like with Project Guardian, using some other interoperability providers. So I think this is all pretty cool to see Connexus playing with everybody and starting to say, hey, we're getting out of our own sandbox. What do you guys think?
Amr, do you want to go first, or should
I? Go first. That's fine.
Yeah, no, well, based on our conversations with Alex at Tokenize This, we knew that they were looking at interoperability, on-chain identity as some of the key themes there. But one of the bigger things that has happened, and a lot of people point to JPM as kind of one of the pioneers in the space when it comes to institutional adoption of tokenization and blockchain. And this move here is really what a lot of people are interpreting as opening up that walled garden, starting to work with non-institutions, right? Hence, Ondo Finance and their own chain, right? Ondo Chain that was announced, I believe, earlier this year. So it's really exciting to see, a use case, even though it's on their testnet for now. But of course, that also only implies, what could come after, right? Which is the mainnet once that's ready to go. Regardless, I think it's really cool that, again, it's step one for an institution like this to start working with others. And I'm just so much more excited for what's to come. And now inferring on what could come later on. As we know with Ondo, they also mentioned a while back that they want to launch their Ondo Global Markets, which presumably is for tokenized stocks. Curious to see how that fits into the Connexus timeline here.
Yeah, I couldn't say anything better, I would say. Especially like with where we're at with tokenization, right? We're still scratching the surface. So you actually need all these different environments, to actually work together. Whether like all these different chains or the partners. At the end of the day, you have to, or the beauty about tokenization is that you're actually marrying what you can do with in TradFi with what you can do in DeFi. To see this collaboration and to see what's Ondo is doing is fantastic news for the tokenization ecosystem, and I would love to see more of that for sure.
Couldn't agree more. In fact, we saw something go commercial this week as well, instead of just the test net, which we all understand. This is the first phase for testing this type of institutional finance, the new operating system. But one of those is already live. Securitize, arguably the leading institutional tokenization platform, has done it again with VanEck's first tokenized fund into the foray. Shocker, you'll be surprised to hear that it is in fact a treasury-backed fund called V-Bill. In this case, powered by the Redstone Oracle, and you can I think it's also multi-chain, if I remember correctly. So classic kind of model and mold being created here, I would say, in the industry. And I wonder just how many more institutions are going to follow the same footsteps also on Securitize. You're almost starting to see now a competitive market of treasury products like BIDL and VBIL now, and what we like to call yield coins, more fun. So any reactions on just VanEck coming into the game, more institutional activity, as well as just yield coins in general, guys?
Man, it's fantastic. I tell you, again, we're scratching the surface right now, and the opportunity is just massive. So, especially for institutions, tokenization obviously has three phases, as you can see them. Phase number one is more like what happened before, which is stable coins. Phase number two was about T-bills, treasuries, and so on. And then phase three is what happened, the asset tokens that happen after, which need advanced, let's say, type of pricing and so on. What we were stuck at in the past is, institutions were worried about getting into this space and not being able to actually have it regulated and so on. And seeing, the advancement that's happening right now in the U.S. regulations, especially in this phase two structure markets, has actually enabled more institutions to look into this and taking a step forward towards tokenization. This is a huge news for us in the ecosystem. I'm pretty sure we're going to see even more players going to actually jump into this and utilize it. We're going to see even more startups building around it, whether it's their own vaults or lending, markets, or even products borrowing against it and so on. I'm looking forward to see what we can do in not just right now, but in 2 years from now. What is the ecosystem is going to do on top of these vaults and that these institutions are building right now? Because later on, we're going to have all these, not just the asset managers, but we're going to have also the community that will start asking for these. Right now, we still don't see that just yet. But once you start having that mass market adoption, the utility and the features that will come with that is not just going to be based on just the yield that is coming from these vaults. It's going to be also coming from the DeFi DeFi features that are built on top of this vault. So overall, I'm pretty bullish on this, and I look forward to seeing how it will get executed in the next few months.
Totally agree with you. I like what you said there about essentially going up the risk curve, right? Stable coins and yield coins or treasuries type products like these are a good way for institutions to kind of get their hands dirty, get their hands on, and have an in production use case for tokenization where they can now apply that across the board. And to your point on vaults, I think Securitize is doing a great job with their S token situation and working with Morpho, Gauntlet, and so forth. We've seen that with Accred. BIDL also has theirs. So no doubt VBIL will probably have theirs if you have to take a wild guess out there. I also like something interesting about this one, right? It's not just another tokenized, T-bill here or treasury fund, but it's the first to go on BNB chain that Securitize is now working on, which is really cool. And then the second thing that I want to mention was it's interesting that it's also swappable, not just for USDC and fiat, but now on Nick VanEck's AUSD from Agora Finance. Nick also spoke at Tokenize this. And so the idea is maybe you're subject to market hours on the traditional options, or with AUSD, you have a little bit more liquidity option even on the weekends, which is pretty cool.
Getting some product differentiation out there. I love it. And do you recall by any chance what was the minimum investment?
So it was $100,000 for all of the chains except Ethereum. It's $1 million minimum investment for that one.
Also very interesting that it can be chain specific. Well, I totally agree with you guys. Very well said, Amr. In fact, I look at it as the same way as crypto, right? Crypto evolved to say we need stable coins for cash management to be able to, have stable value in this crypto world. Well, we're creating a new on-chain world for finance, and financial institutions and traders and everyone needs cash management as well, right? We need stable coins just as much as we want treasury management hence the rise of these now, treasury-backed tokens, and more to come. So I'm also super bullish on vaults now that you mentioned it, Amr. In fact, we saw Securitizes S-Token Vault also go out. We know they're working with Converge. We know many others are bringing DeFi to RWAs. I think once people get a hand on those tasty yields, especially maybe within private credit, and I think real estate has really interesting underwriting potential for DeFi, that you're going to see some crazy innovations and even crazier yields come from it. But, that's just my prediction. You mentioned regulation as well. Actually, we reported on the show just recently that MetaWealth received their VASP license over in Lithuania, and you guys are one of the leaders globally in Europe, but also not necessarily yet in the US. So maybe can you talk a little bit about, your global expansion for MetaWealth, especially for those who are watching and may not have heard about you guys. And then let's get into the nitty gritty of the SEC this week, guys. It was a big, big week.
I think he couldn't set it up better than that, to be honest. Here's the thing. So, I'm from North America, right? I actually, and so my co-founders, the three of us are Canadians. And we started MetaWealth actually back in Canada, and then due to regulations and not having a clarity on that, was there's a great idea here. We would love to help people. We would love to actually help them invest in safe, affordable assets, in real estate, help them actually become financially free and so on, based on passive income and so on. And we were not able to do it in Canada or the US. We were stuck over there. So we decided to move to Europe, and it was a bit clearer, in terms of regulations, that what we can do, what we can't. We built everything over there, and we kind of became a European company that attracts European investors. But always, we've been, talking about the US market. I mean, if you think about it, the US market specifically is the most forward tech market in the world. You can't actually get better than that. If you're talking about marketing specifically, or if you're a new app, the US market, or they have kind of what they call the adoption bell curve, bell curve, right? So at the beginning you have early adopters, and then you have the early majority, and then late majority, and then the laggards kind of. It's, if you're trying to release an application, you're most likely going to get the early adopters from the US market. So it's a massive, massive market that you cannot overlook, right? It's because of regulations that a lot of crypto, not just MetaWealth, but a lot of actually crypto companies decided to take a different path, in which, they have employees in actually the US, in the US, but they're actually targeting investors or users outside of the US. And we've seen it across Ondo, across Midas, across many tokenization platforms out there. So that is kind of, MetaWealth has been in the same position. We actually targeted Europeans, but we've been looking in the US. So when the new administration came forward with the order, the executive orders that they launched regarding crypto, we actually got a bit of hope, that there's a solution over there. Establishing the crypto task force has been pretty helpful, seeing how can much be advanced. As a matter of fact, at the DAS, I remember one of the crypto task force directors actually talking over there and talking about what they have done so far in the US market. And I'm just going to summarize kind of that position, so it ties up to what we're trying to do with MetaWealth. They have, first of all, they're trying to regulate the stable coins out there, the USDCs and the USDT and the likes of it. This is going to actually help move in any startup that actually using USDC and USDT and other stable coins into the US market. This is going to be massive, in my opinion. After that, they go into phase 2, which is regulating the structured markets and the treasuries, treasury securities basically, and after that they go into like other assets like real estate and so on. What surprised me, because like governments actually move pretty slow. What surprised me mostly is that how fast they have been moving. I would say like that conversation that I've seen happening, it was in February, and now a few months later they again surprised me with more information regarding tokenization. What I believe right now is back in February, they already kind of, understood how to move forward with stable coins. Now they understand how to move forward with structured markets and with treasuries. And I'm hoping like within, the next kind of 18 months, we're going to get massive clarity into like how the tokenization framework or regulatory framework is going to look like for all these different asset classes, not just stable coins and treasuries, but the things of like real estate. So our global or our strategy and expansion is that we're watching like a hawk right now. We want to get into the US market. And the minute that happens, we do have partners with FINRA, a broker license that will allow us to actually expand as fast as possible there.
That's amazing.
Curious, Amr, based on your experience, maybe in Europe, other jurisdictions, what would be maybe some key pieces of legislation or clarity that you think the U.S. still needs that you would encourage the SEC to consider and prioritize?
So the thing with actually Europe, there's multiple legislations in which you will have to follow. If you actually, for example, deal with crypto right now, you had the VASP, and then you actually need to have the MiCA license. If you're dealing with security tokens, then you actually need to follow MiFID II. It's a super regulated actually. Asset like securities in general, which I don't recommend the USA just to look at it as like, we just want to adopt it. I just want to see like the EU needs to actually work on their also legislation better to adopt like, DeFi practices as well. So I can't say like, there's better things that's happening in Europe than in the United States. What I can say is that in Europe, they just have clearer regulations that allow you to actually get investors, not just from Europe, but from also outside of Europe, where in the United States, it's actually a bit difficult because you are faced with all these uncertainties of which, first of all, mainly like you're just following Reg D exempt and 506D, I believe, exempt or something like that. Where in Europe, I need to follow MiFID II and I need to follow MiCA and so on.
I've been coming on nearly 6 years of doing the show now every Friday, and market clarity has a thing I've been yearning for and we've been preaching for. So let's hope that 18 months window is accurate. Of course, we know there's a lot the SEC can do, but there's a lot of eyes on what's going on and on the Hill, if you will, right, with Congress and passing some type of legislation that will faster accelerate that. But I completely agree. I mean, this crypto task force and just the SEC in general under this new administration is obviously reacting to the mission to make America the greatest crypto capital in the world, right? So I think everybody is under that ethos, and I think that will hopefully lead to some very good rulemaking. We saw the idea of a regulatory sandbox that's been successfully done in many other countries. Hopefully that could help accelerate while we wait for some kind of legislation, right? But ultimately, we've seen these roundtables come together just this week, a huge one. We're talking a crazy name of players, including all of the commissioners, but Maple, Securitize, Superstate, Blockchain Capital, Robinhood, Canton Network, the DTCC, Nasdaq, BlackRock, of course, Apollo, and many, many more came to discuss tokenization specifically. So we know that you just gave a good background on how the SEC is attacking the whole framework, but it's good to see this happening in front of us in live, and the opportunity for the industry to participate is complete opposite of being afraid of being prosecuted, right? Like that's night and day.
And that's why they move in fast, though. That is why they move in fast. If you think about it, like they said, like, you know what, like we're done with just like being in a room and just, you know, regulating things as we see. We want to work with the industry leaders and see like what we can do to allow for innovation and you know, be able to move forward with that. And it's not just those people that they're talking with. Like these are just like a small, I would say, the highlights of you know, who they have in that roundtable. But they also have you know, many connections with leading VCs as well that they, you know, work with on a weekly basis and try to gain insights of, you know, what portfolios like the new startups portfolios are asking for and want, and trying to execute on this. So I was a bit skeptic, I would say, at the beginning. I was like, yeah, it's another executive order. I don't know where it's gonna go, like how fast they're gonna move, because it's at the end of the day, anything related to government, we from, you know, past experiences, we've seen like it's moving a bit slow. But this, in my opinion, has been moving at a much faster pace than I would have expected, for sure.
Totally. And I like some of the topics that came up during the roundtable. I think a big theme, not just in TradFi and even in tokenization now, but that came up during the roundtables was collateral mobility, collateral management. Robbie Mitchnick made a very big point of it, giving the go-to example of money market funds where you don't want to liquidate out and in, you just want to keep it and use it. We also talked about, you know, lending and stuff like that. We saw, you know, Maple Finance kind of touch on as well, you know, being one of the leaders in the space for that on chain. But I think that another point came up, which was the amount of capital that's locked up for settlement risks that Superstate brought up. And it's like, okay, well, you essentially keep some cash essentially for anything that, you know, could go wrong, but that's money that's not being used to earn yield on, right? It's just sitting there, and it's unfortunate. So the amount, and JP Morgan did demonstrate this on the cash drag side through Project Guardian a couple years ago. So no, it's not a surprise that this topic comes back up. So again, all important points for the SEC to consider as to why people are you know, asking for this to finally get settled up. And on the other side, we saw, of course, the news that potentially there could be an exemption here in the U.S. for tokenization. But in the meantime, if anyone saw a few episodes ago, we did cover that El Salvador also invited the SEC to do a pilot with a couple broker dealers. Maybe El Salvador's regulator would, you know, conditionally permit them to operate. But again, for the SEC to get real insights as to, okay, well, we'll tokenize a piece of real estate, we'll tokenize another product, and get an idea for, you know, insights on, you know, how this can influence our jurisdictions here in the U.S. or regulations rather.
Cross-border regulatory collaboration, man, it's good stuff. Who knew that El Salvador is now working, you know, going to work with the SEC? I don't think 5-10 years ago people would have been thinking that. What a Bitcoin nation can do for you. We got one more topic to cover, guys, as we wrap it up, and that's Amr's favorite subject, which is tokenized real estate. Okay. In fact, MetaWealth, you guys have been on a roll. I think you're a 10th token, right? Wyndham Hotel, I believe in Spain, correct me if I'm wrong, multi-million-dollar project. You guys have an incredible community growing extremely fast. I know you guys are working on some exciting things in the background, but I'm sure you're also, you know, aware of everything else that's happening in the space. This week, we saw the PREH multifamily fund, about $100 million target, come to market. And supposedly it's got some serious backers. It's got Carlyle, DRA Advisors, Walton Street Capital, KKR, and some others. So pretty interesting. They're launching on Chintai. And that's pretty much all that there really is to the offering. So I just wanted to see what's your take on, you know, offerings like this in the market in general when it comes to tokenized real estate now that we got you on.
Man, I love it. You know, like, to be honest with you, you know, we need more of that. You know, we need to actually see more real estate funds going on chain. I mean, 100 million is in a real estate market is a small piece, right? It's not like a big thing. Like the real estate, here's two, I think, numbers I would always refer people to, because it's hard sometimes to see like the big picture. 68% of wealth globally is stored in real estate. A lot of people, like when they see real estate, they think of it as like a place to live or a place to you know, work, but it's a place for people to make money too. You know, all this passive income from rent, from short-term rentals or long-term rentals or pre-construction, flipping it, and so on. Like it's a cash cow business, right? And 68% is massive number. It's like almost the majority of actually global wealth is stored in real estate. That number, like 68%, is actually about $500 trillion of wealth out there just stored in real estate. So when like what we're doing is scratching the surface. What they do is scratching the surface. I hope we eventually can work together on like actually bringing those opportunities to the mass market. Because there's people need to actually have those opportunities. They need to actually find a way to. We need to make a way to for the mass market to invest in actually affordable opportunities that can actually bring him a lot of money, and with low risk, obviously. And I'm excited to see what comes with this launch of the 100 million real estate fund out there. What DeFi benefits they can get out of it as well, and also how I hope they can see, because there's also those institutional backers. They probably also trying to see like where would this lead. I hope they can see like how they can do things much faster right now. Settlement, obviously, like specifically settlements. Borrowing against those assets, mortgage defaults, and so on, right? Because at the end of the day, if you look at it from the other side of the coin, real estate has been stuck, like technology-wise, stuck on financial rails from the 80s. So tokenization is not just gonna enable like a better technology, more innovative technology, faster transactions, so on. It's also gonna bring you a global market that these guys probably did not see before. And specifically, if you think about it this way, if you're a real estate developer, right, then your market is very narrow. You have pretty much two options. You can bring investment through the banks, right, institutions, or high net worth people who has a lot of money, who probably most likely local. So if you actually like have a real estate in Miami, you're most likely going to have investors from Miami, right? Tokenization is enabling for you like a global market that can actually invest a fraction, of that total, let's say, ticket size that you have. So now you went from a very narrow market to a very global market that can help you close assets faster and can actually bring a better, fair pricing to your projects as well, and also on technology that is very innovative, that enables you to settle faster and to have more transparency. So I'm looking forward to it, and I think in the next 2 years, I would say like we're going to see a lot of people deploy more capital, specifically on real estate. The issue right now that we see with real estate is that it's just hard to price. Like you need to have still manual steps in terms of pricing. Once that is solved, with algorithms and with proper market structures, you're going to see a lot of people get into that, be able to understand, why is this one is priced this way, and then you'll be able to have a mass market adoption, and you're going to see like more institutional also backers for that.
Totally.
Completely agree. In fact, you guys are helping lead that charge. MetaWealth is moving a mile a minute. Is there anything late that you can share news-wise that you can tease us?
I do. I promised you actually exclusive news like many times, and then I was like, yeah, just wait for me. We do have a new project actually coming in Rome right now. It's going to be the biggest asset that we have on MetaWealth. It's ticket. The ticket side of it is 4.3 million right now, and we are launching staking as well on MetaWealth. So people who actually invest in this real estate assets that we have, they would be able to stake those asset tokens and get what we have now is called the AUM token. So that is coming. We're going to launch that in the next 2 weeks, and I'm pretty excited because it's the first DeFi, true DeFi a feature that we're launching for our investors. There's more to come. I'm excited for that. I don't want to give more hype than what we can deliver right now. But in the next 8 months, I would say there's 8 DeFi features that we're going to launch for our users.
8 DeFi features. Oh my gosh.
I love it. I love it. As you know, I was bullish on RWA vaults earlier. Now I see why you are too. We are actually planning to track those over at stm.co as well. We're still rolling out a lot of features right now, so bear with us, guys. But that is awesome news. So we will be shouting from the rooftops about that. Thanks so much for joining us this week. We got you on the show, and hopefully we'll see you again soon on the show, Amr.
Yeah, man, I really enjoyed it, and thanks for the invite. And I'll see you around. See ya.
Yeah,
bye.
Great having you on, man.
Let's move on with the show.
Welcome back to the Security Token Show. This is one of our interviews, and today we are joined by Chase Ergen from DeFi Technologies. Chase, how are you today?
I'm great. How are you?
Doing well. Thank you. You guys have a lot of interesting news recently that we covered on the show for one, and the other one is brand new that came out today. We'll start with the one that we covered on the show, which is the fact that you guys are helping with the Nairobi Securities Exchange, to create the Kenya Digital Exchange here, which should be Web3 friendly. Tell us a little bit about this collaboration here and what measures you're taking to ensure regulatory compliance, investor protections within KDX, especially given the diverse regulatory landscapes across African countries.
So we signed a LOI last year with the Kenyan Stock Exchange, the KDX, and this has been brewing for more than about a year. We believe that East Africa is very Web3 friendly. They have taken the lead on, I would say, in Africa to provide the regulatory and liquidity opportunities for Web3 and digital assets to prosper. I've visited Kenya several times last year in preparation of that, and thanks to the DeFi team, we believe Africa is the future, and we're excited that Kenya is the first stop in that journey.
Fantastic. And considering that Kenya's, very high smartphone penetration, its position as a leading crypto market, especially in East Africa, how does KDX plan to leverage some of these factors when it comes to digital asset adoption?
Well, Kenya was the first to launch M-Pesa many years ago. You've seen people in Kenya able to transfer money on phones and trust their phone. Slowly, they've started to adopt Bitcoin, and I think the forward-thinking regulator has said, how do we work on this, and partnering with a firm like DeFi Technologies to make that happen is where we're excited.
Makes sense. And shifting to the other news that actually kind of is the most relevant today, actually, day of filming, is the fact that you guys just listed on Nasdaq under the ticker DEFT. Tell us a little bit about the journey in taking a company in the Web3 space and getting it listed fully publicly here in the US.
It started about 3 years ago, interacting with Nasdaq and the SEC. The previous administration, I think, kept everything on hold, and the new administration has been getting through this. And we're one of the few companies in the digital asset space, Web3 space, that's publicly listed. And I think there's room for a lot more to come, and everyone will expand. This is the future of decentralized finance, and Nasdaq is clearly where we want to be, and we're excited.
Makes sense. And specifically now that you are listed, how does this align with maybe your broader strategy in bridging TradFi with DeFi?
We have a lot of opportunity with our subsidiaries, whether Valour Asset Management, Stillman Digital, DeFi Alpha, Reflexivity Research. We think there's opportunity in the United States for all of those. And the core thesis for us is how to go to emerging markets like Kenya and be the dominant ETP issuer, making it very easy for people to get secure and regulated access to decentralized finance products.
Got it. And Valour specifically, you mentioned their asset management side to the business here. I know you guys have a variety they kind of listed out, but focusing on that one, you've launched and expanded to over 60, I believe, ETPs across 8 exchanges. How do these products maybe cater to the growing demand for regulated digital asset exposure?
I think that most people want exposure to the asset without any of the underlying risk factors that come along with it. So asset managers, banks, family offices, individuals would rather buy a product through an ETP, which ensures that everything is audited, regulated, secure, and easy to use. And we think there's a large growth in all of the various tokens, and many that will come in the future, and we're going to be on top of that. We should be over 100 by the end of the year.
Over 100 by the end of the year.
Yes.
And are those 100, do you think they're going to be in the same similar markets now, or do you have any target markets that you're going after for the remaining, call it 40-ish?
We're exploring South America, we're exploring Southeast Asia, and we will also be giving more straightforward mixes of things like yield-bearing Bitcoin, perhaps some other innovative strategies that you'll see. A lot of that depends on regulatory in these markets, but I think everything's moving ahead very nicely.
Interesting. I do want to touch on the yield-bearing Bitcoin, but before that, you know, this South America you just mentioned, regulatory, of course, I'm sure is a challenge to kind of sift through. But aside from that, how do you, to begin with, and even decide on some of these markets, how do you assess demand for some of these ETP products to begin with?
Well, the whole industry is growing rapidly, so we're looking at adding new top 20 blockchains, and we're also looking at new markets. So both of that combined, we believe there's room for at least another 40 ETPs this year.
Are you seeing maybe RIAs and other asset managers in the space, you know, with their clients kind of showing demand for maybe one over the other? I know you mentioned the Bitcoin yield. Maybe touch on kind of what inspired that product.
Well, with decentralized finance, there's a large opportunity to generate yield with various products, and by combining that with the safety and security of an ETP, we believe that that's an innovative product that people will want to take advantage of. They don't want to just hold the asset, they want to get part of the yield. So we have a advanced formula to legally do that, and we think we can grow those markets and grow the volume, especially given the Nasdaq listing.
Yeah, no, absolutely. So essentially, you guys are now listed on Nasdaq. You're building in Africa through KDX. You're pushing ETP innovation. What really is the end game for DeFi Technologies?
We think the next steps are closely related to AI, agentic trading. We also really believe in real world assets, the tokenization of real estate, of minerals, of hard currencies, and just merging the gap between traditional finance and decentralized finance.
Makes sense. And on the AI side, actually, what excites you about AI, and how is tokenization playing a role in the emergence of the two there?
Well, AI became consumer friendly in the last 2 or 3 years, and we think that same technology will make its way into finance in the coming year or two, and we want to be on top of that. So we've done extensive investments into and research into AI and how that can legally and practically come into decentralized finance.
Yeah, there's a lot of talk now. I think that AI is going to power asset management and just wealth creation in the future, right? Because now you have the cash leg, which is your stable coins, yield coins, and you have the assets themselves on chain. Therefore, the AIs can, talk to each other, interact. So I'm sure that's going to have an impact there with you guys. Any thoughts along those lines?
I think the regulatory and the technology will merge such that everything you described will become possible, where stable coins will be legal in the United States. And after that, things like insurance, things like titles for real estate, all of those will be able to be traded using agentic protocols that are decentralized by nature.
Got it. And so, I mean, you guys are kind of essentially building a new exchange here, bringing new products on. You're looking at emerging tech like AI. Do you think that you're going to be aiming to product legacy infrastructure, and building new rails, or do you think that still legacy will still upgrade in time?
I think if you look at cars, there's still, diesel cars, but the future is electric. The same thing in finance. People will still be able to use a checkbook for the next 20 years, but the young generation and more people will be native digital. We see that in Africa. We see that in South America. We see that in Southeast Asia. And I think as the U.S. takes the lead, the rest of the world will take United States financial and AI policy and make it their own. So stable coins really do allow for a lot of that to take place, to go between those rails. And in DeFi Ventures, we're very active in exploring those new types of technology that do bridge the gap between those various rails, different currencies, different markets, time zones, and we're excited.
Fantastic. Awesome. Well, I'll let you go in a sec, but one last question. If you had to, and you're not allowed to say stablecoins, by the way, but if you had to pick one asset class that will be fully tokenized first, whether it's treasuries, real estate, equities, private credit, whatever, what would your take be? Which one's the first to be fully tokenized?
I think it will be treasuries because they're so easy to handle, and you've seen that with Tether, and I think that's going to grow significantly.
And after treasuries?
Probably equities, and then private credit. Real estate will be somewhere in the middle.
Got it. Who knows? Maybe there's going to be a DeFi token in the future, considering you're saying equities.
We're exploring many possibilities depending on the regulatory, but now that we're in the United States, we're excited to take part in it. And I think this administration has really changed the landscape globally.
Phenomenal. Well, we're excited to see what's to happen. I know the crypto SEC roundtables are happening right now, specifically with a focus on tokenization. So you guys entering the space now here in the U.S. as well, I'm sure we'll drive things forward. Chase, thank you for having me. Thank you for coming on.
Thank you. Appreciate your time.
Wow, congratulations to DeFi Technologies on that Nasdaq listing. And of course, keep doing the great pioneering work you're doing in the space. And there's more where that came from, folks. What a week of news. Let me start rattling off these announcements, starting with Ondo Finance. They've officially partnered with PayPal for 24/7 conversions between OUSG and PYUSD as we continue to see more on-ramps and off-ramps between stable coins and yield coins, as we like to call them, tokenized treasuries and similar money market funds and the like. Anchors Digital made a big acquisition on Mountain Protocol this week as well. Of course, they're moving big now into stable coins, and they are the only OCC chartered bank in the United States. So as a crypto bank, this makes a lot of sense. Impact Capital has officially announced an RIA launch. Okay, so the firm believes that they are going to be serving on-ramps for institutional, municipal, and accredited investors into the RWA world. They're specifically planning to offer asset management, investment management, and capital markets solutions. Good on you, Impact Capital. Intane and KSD Capital are also launching a marketplace for community banks and originators. The idea is to link vetted originators with community banks between their credit facilities, And Global Dollar Network also announced 19 new members for their USDG stablecoin consortium. If you didn't hear of Global Dollar Network, that's the one behind Paxos, Robinhood, and many others. They added now Bitmart, Zodia Custody, Beam, and many more. Also interesting news from Polymath acquiring Polymesh assets from Switzerland. They said they acquired assets and liabilities as well as some PolyX tokens to further make Polymath, their sort of lab side, more capable of supporting Polymath and bringing RWAs on chain, specifically citing institutions. There's not much more to what's going on with this transaction. A little funky when you see usually a labs entity usually spins out a foundation, not necessarily buying assets from a foundation. So definitely would like to know a little bit more about this one. But moving on, we had 96 companies apply to the Dubai basically sandbox, an innovation testing license that they announced for tokenization. 96 companies applied. That's awesome news. Dubai is going to be a powerhouse. We've been talking about DeFi a lot lately on the show, and I'm very bullish on vaults and bringing RWAs to vaults. This is unlocking DeFi, and it's going to be an accelerant of adoption for tokenization in a big, big way, possibly the biggest. And there's some more news around that. Securitize launches their S token vault. This is on Euler, which is powered by AVAX. This is for the BIDL product. So now people can go ahead and wrap that up and get some stable coins against it. And Centrifuge plans to do the same thing with DRWA tokens, DERWA tokens. They have yet to announce who their first DeFi protocol is going to be that they plug into for their DRWA token vaults, but it's going to be announced soon, they say. Okay. We got a lot of new tokens this week. Well, so I'm excited about that. China's largest broker is getting into the RWA game via their Hong Kong subsidiary. That's Guotai Haitong Group with their Guotai Yunnan International subsidiary. They're planning to do digital bonds and structured products out of the Hong Kong regulatory environment. Very cool to see. Tether is introducing tokenized gold in Thailand through MaxBit for their XAUT product, which we reported recently has over 7, almost 8, maybe more now, tons of gold backing it. That's how fast it's grown. And Great Eagle Gold Corp, speaking of gold, is expanding with a $1.5 million private placement that they've announced to power their mineral property portfolio, which is the Nat Gold product behind the company. Uzbekistan is launching a sovereign wealth bond that's tokened. So the HUMO token, which is pretty interesting. The HUMO, HUMO is actually their national payment system for 35 million cardholders, they say. And this is pegged to sovereign bonds and aimed at creating innovative methods of attracting foreign investment, simplifying domestic and international payments, increasing transparency of financial transactions, and establishing an even more attractive investment environment for Uzbekistan. So what they're basically saying is we want to make a CBDC stablecoin available so that people can go in and use it and build on it and hopefully also invest, I guess, into Uzbekistan. And of course, grow their digital economy, make it faster, better, more efficient, cheaper. Finally, a bit of an update on the JTRSY product. This is the yield coin from Centrifuge's Anemoy and Janice Henderson team up. Particula has increased their rating from A+ to AA+, reflecting material improvements to the token's governance, operational, and technical architecture. They say key drivers include the delegation of portfolio oversight to a tier 1 asset manager. That's an obvious one to increase the rating. And the execution of a scaled go-to-market strategy implementation of a more robust access control system addressing prior centralization concerns and reinforcing operational resilience. So this is actually a really great report by Particula that you can go check out. They do amazing work analyzing and rating a lot of the tokenized RWAs out there. I want to end on some cool news now for this segment. The Fed's NYIC, the New York's Innovation Center, which is part of the Federal Reserve Bank of New York, is now doing an initiative with the BIS, Bank of International Settlement Innovation Hub. Okay, 6 additional central banks have contributed to Project Pine. which is their vision for open banking powered by smart contracts. They had an emphasis on requiring flexibility from the participants, but the idea is if the whole world is going to move all cash payments and assets on chain, how do central banks get ready for this? And this is going to be their answer, Project Pine. And finally, Meta, none other than Zuckerberg himself, is looking at stablecoin integrations for collecting cross-border payouts to reduce the cost to pay out creators in different countries. And supposedly they're talking a circle about making that happen. So this is a big move, especially since they actually tried to get into this game a long time ago, which is kind of funny. But now they're going to be using, it looks like USDC most likely to pay out creators. Could we see the same thing with something like Twitter or others? We're going to keep you updated on all things RWAs here on the show every week on Friday. But now it's time for another update from the RWA Foundation. Ooh, I've got goosebumps. What's happening right now for the RWA Foundation and our Wally DAO that we are planning to launch is coming full steam. Okay, I haven't been able to be loud about a lot of this because didn't want to be too soon on a lot of the partners and tech stack that we're bringing into work and build out the Wally DAO. But man, have we got a lot of crazy cool things planned for you. Hopefully you saw our launch video from Tokenize This. That's available on YouTube. Just search up Wally DAO. And of course, the RWA Foundation, our industry association, to bring together the leading protocols, issuers, marketplaces, DeFi applications, and infrastructure for the RWA industry to support and create initiatives like the Wally DAO to further adoption of RWA. So go read our white paper that's available at RWAF.xyz, WallyDAO.xyz. We'll shoot you over to our Telegram. Come join, get active, but get ready for some big announcements in the next week. We got Solana Accelerate. That might be a hint. We had Nick Dukoff from the Solana Foundation on stage for the Wally Foundation keynote. So there's a lot to share, I should say, next week. So just hang in there. But the biggest supporters will be rewarded. We've seen a lot of great community members already do some cool stuff on their own with Wally. So get ready. Let's connect the world's people, all the world's people, to RWAs, folks. So with that, now I got to pick a company of the week. It's a little easier when I got Kyle here for us to kind of review about what the best announcements were that happened this week, right? That's what the company of the week is. We pick, usually, Kyle, my co-host, a company of the week that we each thought was the number one announcement that should get some attention, not necessarily because it was the biggest by size or anything. It's purely our own choice. And in this case, this week for Company of the Week, which does put you in running for Company of the Year, which last year was BlackRock. This week's Company of the Week is VanEck. Okay, VanEck's new V-bill on Securitize is innovative. I love what they're doing already with a lot of different off-ramp and on-ramp capabilities now, especially tapping into AUSD for different hours and capabilities, but as well as offering the traditional options as well, only $100,000 minimum. And of course, it's on Securitize. Interestingly enough, also Binance coming into play through this whole picture. So I'm curious to see what kind of a big move this could mean for Binance into RWAs. We know they've started to have a lot of activity on Binance chain, but VanEck seems to be the first institutional. Not sure if it's actually live yet, if we have that block explorer, but we'll be tracking all that soon enough on stn.co, so don't you worry. In the meantime, congratulations to VanEck. Keep doing what you're doing. Welcome to the RWA space. You already crushed it in the crypto space, so I have no doubt you're going to bring a lot of innovation and growth here. Very excited for that. With that, that's our show, everybody. Of course, as I mentioned earlier, we do this every Friday. Please like, subscribe, share. It helps grow the channel. We need the support now that RWAs are getting mainstream. Of course, we have all of our videos from Tokenize This, our conference that we just held in New York City, featuring the biggest banks, blockchains, protocols, and everybody else in the space come together and talk about this every year, actually. But now they're all available on YouTube in case you missed it. and STM.co. Our new beta is live, so come give us your feedback. We've got more features planned. You'll see those inner pages go live soon enough, and more features roll out, as I said. So with that, everybody, have a great weekend and happy tokenizing.